Hi, just wanted to cover a little bit about the basics of futures trading. Okay, so here's the benefits of it. There's huge liquidity. You won't have any trouble getting your orders filled. For example, the E-mini, which is just one contract, trades over 100 billion per day, which is twice as much as the entire New York Stock Exchange volume each day. It's easy to short. You'll never get caught by a broker saying they don't have any to short. And you don't need to pay locate fees at the beginning of the day to get your shorts all lined up for the day. There are really good leveraged price moves, so it's not just moving a few small ticks like the SPY does. It's pretty cheap to trade. I would estimate maybe about $5 per round trip, something like that. And that's per contract, and usually maybe trading 5 to 10 contracts at a time. And it trades 24 hours per day. Okay, so here's how it works. You basically trade it like a stock. You either short it or you buy it. You sell it and you cover it. The types of futures there are, seems like there's about maybe a couple thousand different types, but I usually deal with about 20 different types. There's futures for indexes, like the NASDAQ or SPY, for currencies, or for commodities. So I'll show you some of the different types of futures they have in a minute. Now, if you were to hold a futures contract till expiration, you would need to take delivery of whatever that commodity was. For example, if you bought crude oil and your contract expired, you would have to take delivery of 1,000 barrels of crude oil. Now, nobody ever does this because, we use it to speculate, and almost every broker that I know of, they will force you to close your futures trade before expiration date because, they don't want to deal with the hassle of having their clients taking delivery of oil or corn or something like that. So what you do is you just trade a contract that's not going to expire soon, do your day trades or your swing trades, and you'd never have to worry about expiration or taking delivery. Okay, you control a large position with a small amount of money, meaning for $5,000 you can get a full E-mini contract of the S&P and take all the advantage of the price moves with just this small margin, which is considered like a deposit. And I'll explain how that works in a minute. Okay, so there are leveraged price moves, meaning a few ticks in whatever futures you hold results in either large losses or gains, much like trading UVXY as opposed to trading SPY, which barely moves when it makes a tick. To trade futures, you just need a normal brokerage account, the type where you have margin and options privileges. You can get that almost any broker. Just ask them if they have futures trading. Two that I know work really well are TD Ameritrade and Interactive Brokers. And I'm sure there are many, many others as well. So here's an example for the SPY. Now, I trade the E-mini S&P all the time, many times per day. To me, it's about the same as trading UVXY. And what I mean by that is, often, what do? You watch the SPY to see if it's going to turn. And if the SPY is turning down, typically you would buy the UVXY, right? Because that gives you a way to leverage the SPY move. Or if SPY has dropped drastically and it's about to turn around and turn back up again, typically we would either short UVXY or go get XIV or something like that to represent that move in the SPY. Well, the good news is with futures, you don't need to break over to UVXY to trade it. You just trade SPY itself. If SPY is overpriced, you short it. You short it here with ES. The symbol is ES on the broker. If the S&P is oversold, you would just buy ES. Instead of breaking over to UVXY, you get a good leveraged move without having trouble getting shorts or anything like that. If you're on Twitter, you can see people talking about ES. Its symbol is ES_F. Usually when I'm trading ES, most people don't know what I'm talking about. So I just tell them I just shorted SPY or I bought SPY. And then they think I'm trading that ETF. But in actuality, I'm trading ES futures. So the hours you can trade it is very special. You can trade it 24 hours a day, but there's two brief times when it's closed. The market closes at 4. At 4:15, ES closes for 15 minutes. Then it opens back up again until 5. And then it closes for an hour. So for these two brief time periods, it's closed, and all the rest of the time you can trade it. You can trade it at 3 a.m. if there's some Asian news that's crazy. You could wake up at 5 a.m. and trade it. So that's something that I really love about it. One thing I like to do with it is when the market closes at 4, sometimes something's still moving. Well, I can short SPY right then or buy it. While everyone else has already left at, say, 3:55 because they didn't want to get caught when the market closed, I can keep on trading through the 4 p.m. up to 4:15. And then I can just keep trading it, 6 o'clock at night, 7. So the way it works with margin is you either short or you buy one contract of SPY. I mean, I got to stop calling it that. You short or buy one contract of ES, and the broker will take out $5,000 from your account as margin. So it's like a deposit. Now, your broker will also monitor your account to make sure that you have a minimum remaining balance of $4,600. That's called maintenance margin. If your account goes below $4,600, they're going to give you a margin call. That means they're going to send you an email, and they're going to say, your account is dropping dangerously low considering that you have this trade on. You need to put more money in your account or close your trade. That's how the margin thing works. Now, this $5,000 is a deposit. If you make a big profit or you make a big loss, once the trade is closed, you get the $5,000 back in your account instantly. So all you need to do is make sure, like if you want to buy 2 contracts of ES, make sure you have 10K in your account. And make sure you have 9,200 in your account remaining. That has to be maintained in your account before they'll make a margin call. So that's pretty easy. In other words, make sure you have enough money in your account to make the trades that you're going to make. And you get used to these numbers over time. They'll just be in the back of your head and it's no big deal. So the tick size is 25 cents. What that means is it moves in increments of 25 cents. It'll go from 1,000 to 1,000.25. Every time it moves up 1 tick or down 1 tick, your trade gains or loses $12.50. So it's basically every time SPY, or no, let's just call it the index. Every time the S&P index moves up $1, you gain $50. So that's the leverage I was talking about. And of course, if it moves down $1, you lose $50. So it's a good leverage trade, much like UVXY is. Okay, so let's look at this in the platform, I guess. If I can find it. Okay, so here's Interactive Brokers. Here I have DX March. DX is the dollar index. But let me set it to ES. Okay, so here's ES 1 month. You can see it's just a basic chart of SPY. And basically it's the inverse of UVXY. But we know UVXY decays over time, so it is different. It's not a perfect inverse, of course. So if you wanted to buy here, you just hit buy, set your order in there, and then when the price hits your limit, then it's going to buy. So actually it wouldn't be a limit, it would be a stop order. Now if you were to short there, like let's say we put a short order in, when your price hit your short order, you'd be in short at this point. To get out, you simply do the other trade. So let's say, let me cancel the buy. let's say we should set a short order and the price triggered. Here I have it set as one contract that will last for the day. It's a limit order short. So when that price hits the line, I will be short one contract. To get out, I just go in and I put my inverse order, which is a buy order. You know, I'm going to cover with a buy down here. And that is one to expire day or good to cancel or whatever at this price. And I didn't transmit these yet, so they're just sitting here. They're not transmitted to the broker yet because the market's closed right now anyways, because it is the weekend. So anyways, you can see buying or selling, it's very simple. As soon as this price moves up and hits this, that margin amount of $5,000 will be deducted from my account. As soon as the buy order clicks, that $5,000 is put back into my account. So that's my deposit during the time that I'm trading. If SPY moves up very aggressively, typically you and I in the past, we would buy UVXY. That's the way that we take advantage of a good leveraged move when SPY is dropping. But now I've moved away from that. Now what I do is when this thing is moved up aggressively, I just short with ES futures. It's much better than UVXY because I can go long or short at any time. There's tons of liquidity. I could do it after the market is closed, before the market opens. It's just a beautiful way to trade. Okay, so let me see. Let me cancel these. Don't want to leave those hanging in there. Oh, one other thing. Let me show you how. Here's my favorites list. These are all the different futures I trade during the day. I trade them all the time. You can see mostly I have the March contracts set up because right now is the beginning of February. So I don't want to trade February futures. That will expire too soon. So I choose March, which is like the next closest one out. But you could choose others too. For example, let me delete that September one and re-add it. Let's say I wanted to trade ES. So I type in ES, I hit enter. So now IB is asking me, you mean you want to trade ES, which is Eversource, or Energy Solutions, or E-mini? Ah, yes, we want to trade E-mini. And it's asking, do you want to trade the index, the futures, or the futures options? Now this is what I love about IB is they have so many different things to trade. Well, we want to trade the futures, the E-mini futures. So I click that one. Now it's asking me, okay, you want to trade ES? Which month do you want to trade? Now we could trade September, June, or March. March is about 6 to 8 weeks out, so that's a good one to trade. Or we could trade a little bit further out. It really doesn't matter, okay? The closer ones have more liquidity, but the further ones you could hold longer without worrying about expiration. So it's up to you to decide. The price difference is not all that different. I will choose June and show you the price difference between the two. Here I have two fake orders in there that are not really going to fill. I already canceled them. But we are looking at September ES right now. Let's click on June ES. Here's June. So you can see it's just the same basic SPY chart. Let me compare June to March. So here is March now. You can see March and June are basically identical. They just expire at different times. There's more liquidity happening in March right now because it's a closer contract. That's it pretty much about how to trade that. Here are some of my favorite futures. I love to trade ES. That's S&P. I love CL, which is crude oil. It's a great contract right now. Crude has dropped so much over the last year. Lots of volatility. Lately, because of the Japanese interest rate move, I've been trading the yen, which is JPY, and NKD for the Nikkei. I've been trading the Nikkei a lot in the evening because that's when their market's open. Let me show you, in fact, in Thinkorswim. I don't really trade this account much, but I like the charts, so I keep Thinkorswim around. Let's show you. Here's the futures tab in the chart. Here are all the different futures that are available to trade. Now look at all the different things. Gold, lean hog, which is pork meat, you know, of course. Coffee, all these different things you could trade. You just need to find a chart that you like and trade it. Now each future has a slightly different trading hours. You know, like orange juice only trades in the morning. It doesn't trade 24/7 like crude oil or ES. Another thing I like about Thinkorswim, it shows you what the tick size is and how much each tick is worth, and it shows you the initial margin required. So you can see here, to trade the LIBOR 1 month, it only requires $253. Each tick is $6. And you can see, let me find an expensive one right here. The Nikkei initial margin is $6,000 per contract. Okay, so there's just so many different ones you could trade here. Oats, soybean. I've traded all of these all the time. Corn. Because what happens is usually they can spike up a lot or move down, or they're in a strong trend. It's just a great thing to short or to buy, you know. There's a lot of opportunities here. Okay, let's see, back to the chart. So if you want to check out the margin requirements or the details about all the different futures contracts, go to cmegroup.com. If you want to see some general charts, go to finviz.com. I love Finviz. Every morning, every time I need an overview of the markets, I come here and I look at their futures page. This right here is, we're looking at their futures charts. You know, they have Forex and all this other stuff. But this is all the main futures. Here's RBOB, which is US gasoline. That's been a great trade lately. Here's SPY, the ES right here, Nikkei. This is a chart of the VIX, but I never trade VIX futures because that's not available to me on my brokers. I think it's very volatile and it's limited to very specific traders on certain brokerages only. Like here's the Australian dollar, the yen, and these are all futures, keep in mind. Here's DX, the dollar. Look at this 2-year note. Just trade this trend, man. It's a beautiful, beautiful trend. It's available to you if you have a futures account. And that's it. Okay, well, hopefully you learned something, and probably the best way to get started is go get your futures account set up and just try single contracts. And by the way, all of this is assuming that you are an experienced trader. This isn't for the beginner. You know, beginners need to start off with baby steps, and that wouldn't be to jump in and start trading futures. But I have a lot of friends who do trade, day trade all the time, and they're more than ready for trying some futures trades. Okay, thanks a lot. I'll see you later.